Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, September 25th. We are taking a full tour of the tech sector today, folks. We are talking consumer with Kirsten Green from Forerunner Ventures, who is coming on the show in just a minute. We've also got the founder of Sword Health coming on the show. We're going to talk to him about the business of digital health. We're then going to talk with the Chief Operating Officer of Asana. They've got some new products coming out today, and I am really excited about a conversation that we've got planned with our financial analysis columnist about Oracle's valuation, which has obviously become very much a center of attention in the land of AI over the past few weeks. But before we get going with that, I want to highlight for you a story that we just put out this morning at The Information. Investment bankers have been busier than ever lately with data center deals that big tech companies cannot get enough of. And so today, we've put together a list of 11 bankers who should absolutely be on your radar. We've got someone from Centerview on the list. He brought together the Scale AI and Meta deal for $29 billion. We've got someone from Catalyst Partners who did CoreWeave's deal to buy Weights and Biases for $1.7 billion. There are also leaders from Goldman Sachs, Morgan Stanley, and JP Morgan. It is a great story. We will make sure to link it in the show notes. Okay, let's get to our first guest. Forerunner Ventures has become one of the most exciting venture firms around because of the portfolio that it has built. It has many consumer startups that have become household names in the land of tech. It has invested in Chime, Aura, Glossier, Headway, Hims and Hers. I want to bring on the founder of the firm, Kirsten Green, to talk about this moment for the business of consumer. It's her first time on the show. Kirsten, welcome to TITV. It's great to have you.
Hi, Akash. It's great to be here. Thank you for that really nice introduction.
So we have so much to get to and so little time, but we're going to try to make the most of it here. Look, I think the way I kind of want to start things off is I want the Kirsten Green blueprint on how to build a great consumer company in 2025, because so much has changed. And yet, I don't know, a great consumer company, I mean, is it really that different than it was 15 years ago with the way people's behaviors are? Talk to us about how you think about that.
Okay. I love this topic and I love this moment because I do think that new technology that creates new possibilities sort of begs people to really rethink what an amazing product or service or experience is. And I'm certainly not suggesting that we don't consider past learnings and existing behaviors, but I do think it's a moment to really allow yourself to step back and be imaginative, be courageous with your thinking and your approach, and play with the new technology. And don't be afraid to try new things. I think that if you look back on many of the past breakout moments, they might have come to market and people might have thought, I don't get it.
Right.
That's not for me, whatever. And then, there's early adopters, they bring people along and a movement starts. And that's really where change happens. And I do think that, that's a big thing that we're excited about in general in this industry is, inventing the future and inventing new. And right now we have new technology to play with. So amazing time.
Do you think that AI has changed the consumer category forever?
I think AI has changed most everything forever. Right. And with respect to the consumer category, I actually think we're at this really interesting moment where if you look back on many of the technology breakthroughs, it's been slower to get adoption. This has been unprecedented speed of adoption on the consumer side. And I would argue that consumers have been leading this adoption period. And one part of it is because we're in a much more connected digital world and everybody is online trying things. But another reason is because consumers' experience of AI right now is it's magic. And I think that actually is the opportunity, but it's also one of the challenges right now. Because I think all of us that are here building it, we think of it more as magical than magic. And the difference is that it's a lot of work to bring that to life. And so I would characterize it as, in many ways, the consumer's expectation for what's possible or what should happen is ahead of the build right now. And that's one of the, again, opportunities and challenges of this moment in time.
Right. So you had this conference a couple months ago, the Humans in the Loop conference, and I was watching some of the interviews you did after that conference, recapping it. One of the things you mentioned came up during the discussion was, how do you deal with the 800-pound gorillas in the room, the OpenAIs, the large tech companies who have a lot of resources to invest and spread their bets across a number of applications, not the least of which are consumer bets. And the point that you made in a lot of these was that there are verticals, or there appear to be verticals, where those large companies won't actually dominate. And what I want to ask you is, what are the verticals where you think there is room and where they won't actually, capture all the market and consumer?
Okay, so it's a two-part question here. And I think on the first point about just like, how do you navigate being new or being the underdog sort of to come to market when there's these big platform players? I think that if you look back on history, there is a sea of failed products that have been launched by big tech companies. Big tech companies thinking they have the audience, thinking they have the resources, and as natural, you're playing around the edges because something sounds exciting. But the execution, the kind of precision at which you understand that particular slice of the market, that particular need, they have failed many times, and new companies have come to rise in that context. And so I think that people should keep that in mind, that it's a possibility. And maybe a best case scenario is you have a big company that's starting to introduce ideas, that's starting to prime the market for you. But if you come at it with precision, with expertise, with imagination, like, there is a possibility, and it's been proven in history, and I think it will play out again this time, where new can emerge.
And is there an example of an area here where you feel like the idea might have been introduced, but the execution isn't going as well as it could be, and maybe that poses an opportunity?
Well, I think so. If you look at ChatGPT, put the report out last week about the ways in which people are using ChatGPT. It was fascinating. To me, that's a roadmap of opportunity. Yes, that's partly their opportunity, but it's everybody else's opportunity for the same framework I'm saying now. Is their version of that the best it can possibly be? At the risk of, I think, perplexities playing with shopping. Have you
Right.
changed your shopping habits to go there yet? Like, no, it's hard. Like,
Right.
what does it take to do it? I mean, I'm rooting for all these players to do it because I think it's part of what brings the industry along. But I think while you're trying to be good at so many things, like, it's very hard to nail a particular verticalized experience.
Right.
And so actually, Akash, like, without, hopefully not sounding like a Pollyanna, I think everything on that chart is kind of fair game. Now, OpenAI, for instance, has come and said they're really interested in science, they're really interested in health. No surprise. Those are huge, big categories.
Mhm.
Is that a one size fits all? Are there how many big markets and experiences are there to be had inside of that one category? I would argue a lot. And I
So
think in most cases you look at companies that are big, huge scaled companies now, and very often, if not always, they started with a wedge into the market. So it's kind of one of the things we're looking for right now, which is, where's that founder that has the ambition, has sort of the early signals that say, like, I could imagine this person being the leader of a big company and kind of
right.
continuing to push further, but has a focused precision about how to meet the market right now and use that as an opportunity to build credibility and business foundation.
Right. You talked about health, and health is certainly an area that we're trying to talk more about on the show. Your firm is investors in Aura, and I know one of your partners has a board seat on the company, and it's been an exciting week of news for Aura. The company put out some news about how many rings they've sold, and also it's been reported that they are raising money at a valuation just shy of $11 billion. And I want to talk about the business, but
Yeah.
tell us, 11 billion. Does that sound about right to you?
I mean, I'm not the one to confirm these things. I'm sure the company will make announcements when the time is right. But I think, to your point, like, this is an exciting story.
Right.
And a shout out to my partner, who I know has been an incredible champion and constructive partner to the
Right. And
But
we actually we had Tom on the show, and he actually on this show he revealed the company's 2024 revenue figures for the first time, 500 million, which is it's again, it's projected to double this year. It's according to reports right now. So we'll get that when the time comes. What I do want to ask you about, though, is where you, and look, at some point we should have your partner on the show to talk more about this. But where do you see Aura's business going 2-3 years from now? Because there is sort of this trend around things becoming more medical, right? You see some of these wearables companies now, a lot of them now even 8 Sleep looking to apply for FDA approval for their products, right? We have Whoop also moving in that direction of working with the FDA on things. I mean, where do you see this going? Is FDA, is getting FDA approval, is that like the competitive advantage now? Does it become easier for companies as the research evolves? How do you think of that in the health context?
Okay. So I would say like a competitive advantage in this context is like, for instance, Aura having 5.5 million rings on people's fingers, and that number growing at a really exponential rate. It's increasing where it's been before. And if you have that many people that are engaged with that product, are sharing data, I think that is an incredible signal to the market. It's an incredible audience to keep building from. And if you think about like imagining, as you identified health as a big category, all the different places that you can go from health in that sphere. Like, okay, yes, there's the FDA topics. I don't know that that's like, it depends on what you want to do, if like that's a critical advantage to go there too. But there's, everything from kind of medical research, there's all of the insurance aspect, there's all of the ways in which these are guiding people's decisions about their future health routines and their future health purchases. So this is a great example of like that wedge into the market being that consumer relationship that got built around communicating the importance of sleep, giving them a tool to understand the sleep in the context of their health, and now saying, okay, let's go on this together further. What else can we do? And this team has that ambition. And I think they have, so many ways that they can build the company out from there to really be a full-fledged health platform.
Right.
That's Aura as a use case, but that's an example of what we were talking about before in consumer.
Right. Last question for you before we let you go. There is sort of this tale of two cities stories, I guess, in consumer, which is that a lot of these consumer companies that get big, they get big really fast. And then we've seen companies, certainly in the e-commerce world, going public, and their businesses have struggled sort of, since the time they've gone public. How do you kind of square these two realities? Maybe if we just narrow it to e-commerce.
We can narrow it to e-commerce, or we can expand it out to the whole market and even beyond consumer. I do think it's like in some ways the life cycle of a company, and it's like the journey that you go on. And some companies have the vision and the execution and the opportunity to keep getting bigger and keep expanding from where they are. And some companies stall out. And that can be, that can be the execution of the team. It can be the vision of the team. It can be changes in the market that weren't responded to in the moment. It can be letting somebody come in and being that much better than you, that whatever was your competitive advantage, you didn't step into. Right. So I think that, it's if you had to summarize it, I would call it's a case of like, you can never let yourself think that you won. You just need to think you keep having an opportunity and what's next and aiming towards that.
Great. Well, Kirsten, thank you so much for coming on the show. It's an exciting portfolio that you have, and I'm excited to have you on more and more as there's more news to come of it. That is Kirsten Green, the founder at Forerunner Ventures. Okay. Oracle upsized its latest debt offering yesterday from $15 billion to $18 billion. The company is selling bonds that mature as far out as 40 years from now. This, of course, is all part of the company's way of funding the more than $300 billion in cloud contracts it has with OpenAI and other AI companies. Let's not forget, it is also building all of those data centers. I want to bring on Anita Ramaswamy to talk about Oracle's valuation in this moment, because it is not yet a Mag 7 company. It's not quite that big yet, but it is certainly talked about in the same vein as those large tech companies. Anita, welcome back to the show. It's great to have you.
Great to be back, Akash.
So let's talk about Oracle. You wrote this great piece last week that I want to get to, but what did you make of the bond sale this week?
So the bond sale is kind of an extension of what I was talking about in my last piece, which was Oracle's push to become a cloud provider. Cloud computing is a really capital-intensive business, and Oracle needs to raise a ton of debt in order to serve some of these customers where they're going to be providing data centers for rental to their customers for AI.
Right. Now, you wrote last week about the company's valuation, and one of the most interesting points you made is that the valuation as of last week on a multiples basis, it's higher than Microsoft for the first time in 8 years.
Yeah.
And, you are our columnist, which means you like to take a stance on whether or not things are too high or too low. What did you make of that? Do you think this is too high? What are the people you're talking to thinking about it?
I think it's a little ridiculous given the risks that are inherent in the deal. So, just to run it back for a second, Akash, the reason that Oracle's stock skyrocketed a couple weeks ago when they reported their earnings is because Oracle said that they had a lot of contracted revenue, majority of it coming from OpenAI, which was reported later. And that contracted revenue is going to increase their future cloud revenue to, from right now, their cloud infrastructure business is around 1/5 or less of their total revenue. And they're saying by 2030, that business is going to be around 3/4 of Oracle's total revenue. So that's massive growth and massive expansion. And I can definitely understand why analysts, investors got excited, bid up the stock. It's still trading about more than 20% higher than it was, when it reported its earnings and when I wrote my column. And so I can understand why there's exuberance in the market, but at the same time, there are so many risks and challenges that could come with Oracle's push, and that revenue is far from guaranteed at this point. So I think investors are getting a little bit over their skis here. I don't think it's justified at this point that Oracle is trading at a much higher multiple than even Microsoft for the first time in 8 years, when Microsoft has had a long track record of owning and running their own cloud business.
And what are those risks?
So I think the biggest one investors have been talking about is, if the majority of the revenue really is coming from OpenAI, as the reporting has suggested, that, OpenAI is a startup, they're burning billions of dollars in cash. Can they really pay this at the end of the day? We don't know, the details around how the contract is structured, but that's certainly one risk. I think for Oracle in particular, whether or not they can get a different customer besides OpenAI to sort of fill that capacity, which is what a lot of analysts are arguing. If OpenAI falls through, they're saying there will be other AI customers that'll want to use Oracle's cloud servers. But even if that happens, Oracle fundamentally today is a software business. It sells software. It sells databases. It sells enterprise resource planning software for, businesses to manage their day-to-day functions. It is not a cloud computing business. That's a really new and nascent line of business, and that's fundamentally lower margin. So I think one of the biggest risks for investors looking at Oracle's pivot into this area is how much capital is it going to take? How is that going to drain Oracle's cash reserves? Already, we've seen for the first time in years, Oracle's free cash flow dipped into the negative recently. And, on an ongoing basis, it could mean that their long-term margins come down quite significantly.
40 years is a long time horizon for these bonds. I don't follow the bond market, as closely as, well, let me put it this way. I don't follow it at all. Okay. So, 40 years to me seems long. So what are your sources telling you about what they're thinking about that?
Yeah, so a 40-year bond is highly unusual, and Oracle's already really indebted. I mean, they're on the hook for over 110 billion in total debt, and they only have about 10 billion in cash on hand, and that was before this bond offering. So we kind of knew and we anticipated Oracle was going to go to the debt markets. And right now it seems like, people are willing to fund the deals, but a 40-year duration really de-risks this kind of deal for bond investors because they're essentially giving Oracle 40 years to pay back the full amount of money. Not only that, but the interest rate on these bonds, as we've reported, is actually a bit higher than the typical interest rate extended to your corporation that's the size of Oracle. And so I think that that's reflected in the terms of the deal.
Right. Now, you talked about the margins as a potential risk in terms of the long-term prospects of the business. I wonder if the people you're talking to, do they not have any concern about sort of the circular flow of cash here between the cloud companies and the AI companies and the chip companies? I mean, is that not a mess waiting to happen, maybe?
I mean, the other news story that's really relevant here to your point, Akash, is the OpenAI NVIDIA deal that we just saw announced. There was a letter of intent. OpenAI is, going to be taking capital investment from NVIDIA and then using a large amount of that capital to invest in computing infrastructure, which a large chunk of that is probably going to go back to NVIDIA because they're using NVIDIA's chips. Another portion of that could, in theory, go to Oracle because Oracle is sort of renting out the equipment besides the chips that will be used in the data centers. And so there is some circularity here. And I think that analysts, at the end of the day, a lot of them about that OpenAI NVIDIA deal were very quick to point out that, this is something that just solidifies NVIDIA's dominance. And a lot of them were pointing out that they believe that OpenAI actually approached NVIDIA about the deal. And my point is this, whether or not that is true, which it very well may be, that still doesn't mitigate the concerns or the idea that it's a circular flow of revenue. I mean, at the end of the day, NVIDIA might be in a strong position and they might be dominant in the market, but if they're the only company that long-term has the balance sheet or, has the will to keep funding these very capital intensive deals, then, the market would be in a pretty tough place in terms of the liquidity it needs to continue fueling this build out.
Right. Great. Well, Anita, thank you so much for coming on and talking about it. It's something that it's great to get all these different perspectives on, and we've had some analysts and investors on as well. Next time we get one of these juicy press releases, we'll have you back on again to help us break it all down. That is Anita Ramaswamy, our financial analysis columnist here at The Information. Okay. Well, digital health has become one of the most exciting applications of AI, and Sword Health is using the technology to help deliver care for everything from mental health to health for that aching back that I'm sure many of you know all too well. The company was last valued at $4 billion in June in this year, and it is backed by General Catalyst, Coastal Ventures, Comcast Ventures. I want to bring on Bento, the founder of the company, to talk about how he thinks about his business. Welcome to the show. It's great to have you.
Thanks for having me, Akash. It's a pleasure to be here.
So tell us a little bit about what your company actually does, and then we'll get into some of the trends.
So basically what we are doing is we call it internally, we are building this AI filler that combined with human clinicians allows patients to access much more efficient care at home, independently, in total convenience, comfort, and of course, that drives high quality care. And by enabling high quality care, that also massively reduce costs for our clients, which are payers, self-insured employers, and all the organizations that have the job of paying for care delivered, but they want to get the highest quality of care at the lowest cost possible.
Right. And so you are selling technically to the employers and the insurance companies right now.
Yes, you can think about Sword as an AI provider of care.
Got it. And this is everything, like I say, this is everything from muscle aches to, mental health appointments. I mean, just explain to us the range of things that you actually look at.
So we have what we call the AI care platform, right? And we started by launching our vertical in 2020, which was focused on physical pain, right? Low back pain, shoulder pain, neck pain.
Right.
Physical pain is the problem with the highest
shoulder,
prevalence.
neck, eyes. Okay. Yeah. All right. Okay.
Called the musculoskeletal system.
Right.
In 2022, we launched our women's physical health solution. For example, urinary incontinence after childbirth, massive problem in the female population. We have a solution to address that. And afterwards, we launched mental health, longevity, and now what we want to do is all verticals of care, where right now care is delivered in a 100% labor-intensive way. We want to invent how care is delivered there using AI as the provider of care.
And do they actually see a doctor on the digital health platform, or is it all just automated care with the AI companion?
Yeah. So it's basically completely independent with the AI care specialist. We call it Phoenix. So you interface with Phoenix, which is our AI care.
There's no doctors involved at all then?
So you have the clinician in the loop, but it's basically remotely and asynchronously supervising everything that the patients are doing with Phoenix, acting as checks and balances of the AI system, and also, and this is very important, being there to provide human touch. And so it's really about how you can have AI working alongside human clinicians so that clinicians are doing the complex, intellectually elevated parts of the job.
Right. And presumably you can get access to them if you need to talk to somebody. Got it.
Yes. By the way, healthcare is not a one size fits all. We have patients that require that more hand-holding and white glove treatment and connect with human clinicians often. And then we have patients that want to do everything almost independently with Phoenix at home.
Right.
So it varies.
Now, one of the things I wanted to ask you, but I do want to ask sort of about long-term trends for AI in healthcare. But, we had Raimondi, the CEO of General Catalyst, on the show just yesterday, and I know they're a big backer of yours. And we were talking about the hospital acquisition that they did. And I asked him about what the broader strategy was for General Catalyst. And he said, it's all in service of our founders and helping them get the support that they need. And you are a healthcare-focused company. Have you been able to leverage that hospital acquisition that they made at General Catalyst? What kind of support has that offered you? Just talk to us about that.
Yeah, so the ecosystem at GC has been very important to us. The partnership with the hospitals, it's something that is starting now. So that partnership is still in the early stages for us. But the broad ecosystem that GC has, not just in terms of infrastructure, but also in terms of network, it's been very fruitful to us.
And so do you imagine yourself talking to this hospital chain,
Yes.
asking them questions about best practices or, maybe even leveraging their talent network? Like, how do you see them sort of helping you tactically?
So tactically more as designed partner for us to launch new AI care verticals, more in that sense.
Got it. So maybe like a pilot partner, you would pilot new tools with their
If you want
their
to
patients.
expand into the GI space or in the cardiac space, for example, it's good to have design partners. And also for clinical studies is also something that it's important to have partners like that in the more traditional care world.
Now, we saw Hinge Health going public earlier this year. You guys just raised money at $4 billion valuation. Are you looking to go public in the next year?
Not in the next year, no.
How about the year after that?
Probably not, but who knows? Everything flips on a dime on this space, and it moves very, very fast. Look, for us, the IPO itself, it's not a milestone that we are aiming towards, right? We see that as a tool. When it happens, if it serves a purpose, by the way, which honestly, it's not. The way we look at the IPO, it's not as much when, it's much more as if we should IPO or not.
Right. And we've heard about all the capital that's available in the private markets as well. Last question for you. We like I mentioned, we had Hinge Health on the show, and Dan Perez was talking about how he views AI augmenting healthcare, but also how AI can take over a lot of the non-touch elements of healthcare. What do you think it automates, and what do you think it doesn't in healthcare?
So I think it really allows us to augment clinicians in many different areas, right? I think, of course, the obvious part is everything that requires touch and the physical intervention of the clinician. Everything that, of course, obviously involves touch. It's something that AI will have a long time to be able to replace the clinician on, right? So we would need to see a massive evolution on the physical AI layer to be able to do that part of healthcare, right? And so that's an area where I'm not bullish AI replacing healthcare workers. But everything that involves using your minds and your knowledge, AI is a very good tool to augment clinicians.
Right. Great. Well, V, thank you so much for coming on the show. It's great to have you. That is V Bento, the CEO of Sword Health. We'll have you back very soon here on TITV. Okay. If your company has tried to become more productive, chances are you may at some point have tried Asana or looked into it. The company runs a suite of collaboration tools. Today, it is unveiling new AI agents that it says will help you get even more stuff done. I want to bring on Chief Operating Officer Anne Raimondi to talk about what these tools will do for the company. Anne, welcome to TITV. It's great to have you.
It's great to be here. Thanks so much.
So, Anne, I want to ask you about this moment for Asana, but very quickly, tell us about what your agents actually do that you're unveiling today.
Yeah, so we just launched today at our London Work Innovation Summit, AI teammates from Asana. And what they do is actually they can join your team and actually take action on behalf of your employees as part of an entire team. So instead of working in silos and everybody having their own AI agent or chatbots and trying to get those all to coordinate, what we've done is really build teammates into Asana to join your team. And so we actually launched 12 out-of-the-box teammates, showed a demo today, a creative specialist and strategist, as well as an IT IT specialists. And so we showed how these AI teammates can actually be added to existing workflows. You can train them. They will show you the context and how they're taking the steps. And then people can give them feedback so they can learn and then actually show you. They'll say, adding it to my memory. So if you've got guidelines in place already, they'll take that all into context. So we're super excited about it. People saw it today and were already ready to go build their own teammates or use the ones that were out of the box.
So I want to talk to you not just about this product, but sort of the broader landscape here for agents. You guys call them teammates, whatever you want to call them. Here's my thing about it. We've had a number of executives from enterprise software companies on the show, and it just kind of feels, some could say product innovation is, you could say it's dead in the most extreme sense. Some could say product innovation is lackluster, right? You could just, middle ground and say it's unoriginal. Okay, everyone's doing agents. And so I just want to ask you, does it not feel like every enterprise software company is coming up with the same thing? Because, you guys have teammates, Salesforce is building Agentforce, right? ServiceNow has their agents. Atlassian is doing everything. Like, it feels like you're all doing the same thing.
Yeah, it can feel very overwhelming now in general, all the AI innovation. There were so many parts to your question, so I want to make sure I'm answering those. One is, I do think it's a time of tremendous innovation in enterprise technology. I definitely recognize there can be a bit of overload right now because everyone is introducing AI.
And overlap, really.
And specifically for Asana, the reasons we're so bullish on AI teammates is there's there's sort of three things that we've built in mind. One is for AI to have a real impact on teamwork and across the organization, it needs context.
Right.
So it actually benefits from understanding who your employees are, what team they're on,
And really
what
getting the
they're doing.
data.
Exactly,
Access to the data.
exactly. And then the second, is like transparency. We were just talking about you want AI to show you what it's doing, show you the work so that you can edit those steps, you can give it feedback, it can remember how to improve. And then the third, very important, is you want control or governance, right? So the way that we've built it, you can really be specific on what data, what teams, what information your teammate is working with, whether it's publicly available information across the whole company or private to a specific team or department. And so all three together, we feel like really makes a difference on effectiveness and control.
On the context piece, this relies on the teammate or the agent being able to access data, presumably not just data that's held within Asana, but also in, all the partner softwares that you use. We've written at the information about some of the walls that software companies are putting up saying, hey, we don't really want you to access the data in this way. A lot of the times because they're developing competitive products. How much of an issue is that for you?
Yeah, so far it hasn't been. We feel like the fundamental context that's really important to an enterprise is built into Asana already.
Okay.
Tasks, projects, portfolios, teams, permissions, rules. And then we do have very robust integrations with where work is happening, for example, Google Docs. So teammates can work within Google Docs, take comments, turn them into actions. So those existing integrations we feel like are really powerful because they have the teammates working where your team is already working.
I want to sort of put this product launch in the context of where the company is at right now. The company, right now it's trading below its IPO price. Revenue growth has stalled to about 10%. You're projecting lower than that in the coming quarter as well. How do you view this product launch in terms of the company's financial performance? Is this going to be the thing that gets us back to 15, 20% revenue growth? Why should people be buying into Asana right now?
Yeah, for us, we really believe that AI is transformative for the space that we're in, collaborative work management, that it can really accelerate how humans and AI work together. And that's really the work of the future. So in terms of growth, what our AI launches do for us from a business perspective is help us expand beyond seat-based licensing revenue to consumption-based revenue with AI. So that's really how we're seeing that as part of our growth strategy.
This is the first time you guys have been doing consumption-based pricing?
We had launched it with our AI Studio add-on, which we had introduced, but Teammates takes that even further.
Got it. Last question for you. I just want to get a sense of how many of your customers are using your AI tools right now?
Yeah, we have several different types of AI tools. We've got AI that's just part of every paid subscription. And then we have these add-ons, AI Studio, and now the launch of AI Teammates.
Right.
A good percentage of our paid customers who have AI enabled in their applications already and are seeing really good use of that. And so those are kind of the three different ways that people can be participating and using AI in Asana. But really good, robust
quantify what is a good percentage?
Yeah, we don't currently disclose like the percentage of the paid user base that is using each of those different products, but we've made it widely available, including a free version of AI Studio in every paid plan.
Right. Okay. All right. Well, thank you so much for coming on the show. And it is an exciting time for everyone to launch AI agents. And it's great to see that Asana is getting in the mix. That is Anne Raimondi, the COO at Asana. Okay, well, that does it for today's show. A reminder that we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I'm already excited for our next show tomorrow. And so until then, bye-bye for now.